call for November 18th, 2010. We'll talk a little bit about the stock market first and then go into the other markets. We got a bunch of individual stocks today. First of all, the stock market looks to me still, like we've been saying, that this pullback down into the 118 support on the spiders may be the low for the pullback that we were going to have before the rally. Closes above 120 on the spider would tend to confirm that. And should this work, as we're expecting it to, I can see the spider making it to 128 to 130 by the end of the year. I know that's a 10-point move, but equally, we've got almost 6 weeks to do it in. That's not that big a move, realistically, when you look at it. We note that a lot of the indicators got oversold. Even the stochastics have moved down into the buy area on this pullback, and we still sense fairly healthy skepticism in this move, although one concern here, and we're going to cover this in the weekly and midweek next week, sentiment indicators have come down. Percent bears last week was 20.2, but my guess is after that was for the week before last, the next week's sentiment figures should kick back up into the 23, 24 area, and if they do that, that'll be the fuel we need to go into the end of the year. The put-call ratios also have come down a bit, and I've been reading a lot about how people are talking about how they have come down. But nonetheless, sentiment is not exactly a timing tool. It's more of a condition indicator. We can go up on lousy sentiment for a few weeks. What I am interested in and thinking about is what happens after the first of the year. We'll get to that a little bit later on in the year here as we see how things unfold. But it may be that we're setting up for a bad first quarter next year, even though I think next year could be ultimately a pretty decent year. Let's take a quick look at the bond market. We got some indications that bonds could have a sharp rally, and they actually did. They were up 233 the other day, but that was right back to where we got the indications. Got to say, I still don't like the interest rate markets because I still think we're going to see a little bit stronger in economy. If we do see that, we're still going to see rates probably slowly rising. That said, though, the TLT is trying to bottom in this 94 to 96 area. A rally to 99 and to 100 can't be ruled out here, but I don't think that would be bad for stocks, and I don't think that would even signal that there are problems. The real kicker here may be that not a lot happens with these bonds through the end of the year. We just sort of build a base, see what happens. I note that the corporate bond ETF, the LQD, has come down a bit, but it still looks a little bit better overall than the TLT does. And I also note we had a nice drop on the HYG, very sharp, but if that starts closing back above 90, we're going to end up still in an uptrend on that. And it's at 89.90 now, and the stochastics are oversold and starting to give a buy signal. So we certainly could have some interesting developments there. I'm losing my voice a little bit today. Looking at the gold market, it has retraced right to the 130 area on the GLD we thought that it might retrace to. It's above yesterday's high after an inside day. That's usually very bullish. My guess is the GLD is on its way back to at least 137, 138, and possibly to 140. We will maintain our 15-month target now, I guess it is, of 152 on that GLD, but we are starting to see some sentiment indications and such that gold may pause a little bit after the end of the year. We are certainly in a favorable seasonal time period for gold, and that usually continues into January, so we'll reevaluate that, but for now I'd be a buyer of gold here as a trader with a stop of, say, 129 on the GLD, and gold remains one of my best and most favorite long-term investments. I am still firmly in the inflation camp. We talked a little bit about the DBC, which came down into that 24 support area. Anything above 25.50 on the DBC suggests we're on our way back to 30 on that, and that would be in line with our thoughts of a commodity rally. The same with oil. Oil had a sharp drop. The stochastics have moved down into the oversold area. We've basically held the 34, 35 area so far, and should we continue to rally on oil, I think the USO can get to around 40, 41. we note that winter is coming, and that is one of the favorable seasonal times for oil, and so we're very interested in that market here and some of the oil stocks as well. We'll talk about them when we get to the stock section of the call. Also want to note the natural gas ETF, UNG, and also the natural gas futures. I realize the UNG is not the greatest ETF. There's some risk there, but by the same token, the pattern is very similar to the natural gas futures, and it looks like a bottom on that at 540. That does have a tendency to rally into the winter months, and I would say, again, we're probably looking at 690 to 720 on that. That would be a nice move. I'm not sure I would trade it, and for those of you that are in it, I'd consider removing it at that time should we get to that 720 area. If we do get there, somebody email me, and we'll cover that again on the call because that could be a very key and interesting move. Looking at the euro, if the euro can make it through 136, this dollar up move may be over. That's on the FXE, currently 135.52. The dollar looks like it's going to stabilize in here, and the euro stabilize. Again, we may not have a lot of movement in those markets. And the yen, FXY, which is key to the Japanese market, has certainly come down. The main support on that, if we can go through 118, is the 115 area. That is really key. Below 115, Japanese stocks can do well. The yen is a little bit oversold. We'll probably see some kind of an intervening bounce there. But remember, guys, the dollar and commodities do not have to move together. One of the surprises here may be that the dollar goes up and commodities go up because the economy is strengthening. With that, I think I've covered all the markets. We're going to go into some of the stocks. We've had a number of questions on the limited, which we put on our list.